You know that feeling when you finally pay off your mortgage? That moment when the house is truly yours, when decades of work finally add up to something solid? For most Americans, that's the finish line. The reward for playing by the rules. But here's what nobody tells you. Even after you own your home outright, you're still not safe. Because your insurance company can decide overnight that your house, the one you've been insuring for 30 years, is suddenly too risky. And just like that, a single letter can unravel everything you built. It's happening across America right now. Wildfires in the West. Hurricanes in the South. Even hailstorms in the heartland are making insurance companies nervous. And when they get nervous, they don't stick around to help. They cancel policies and move on. But 7 states have decided they're done watching their residents get abandoned. They're rewriting the rules, and this time, they're putting homeowners first. From coast to coast, real changes are happening that could save you thousands and restore the security you thought you'd lost. So the question isn't whether this matters. It's whether your state made the list. State 1, Florida. Let's start in Florida, because if any state knows about insurance chaos, it's this one. For years, Florida homeowners have been caught in a brutal cycle. Hurricanes hit, companies panic, premiums double, and suddenly the retirement paradise everyone dreamed about feels more like a financial trap. But Florida isn't taking it anymore. The state just launched one of the most aggressive insurance reforms in the country, and it's aimed directly at helping the people who need it most. The centerpiece is called My Safe Florida Home, and it's not just another government program that sounds good on paper. This one actually puts money in your pocket. The state is handing out grants, real money, to help homeowners strengthen their houses against hurricanes. We're talking about upgraded roofs, impact-resistant windows, reinforced doors. The kind of improvements that used to cost $15,000 or more out of pocket. Now, Florida covers a big chunk of that cost up front. And here's the part that matters most. Once those upgrades are done, your insurance company has to lower your rates. By law. Some homeowners are seeing premiums drop 15 to 20%. That's $1,500 to $2,000 back in your account every single year. For retirees watching every dollar, that's not small change. That's a car payment. That's medications. That's breathing room. But Florida went even further. The state cracked down on the fraud and lawsuits that were driving costs through the roof. Contractors who used to chase hurricane claims like ambulance lawyers? They're being regulated now. Companies that tried to game the system with inflated repair bills? The state is shutting that down too. It's not perfect, and Florida still has work to do. But for the first time in years, homeowners here aren't just getting squeezed. They're getting help. Real help that shows up as lower bills and stronger homes. And if you've been thinking about Florida for retirement, this matters. Because beyond the insurance changes, Florida still has what brought people here in the first place. No state income tax. Year-round sunshine. Towns like Ocala and Lakeland where you can still buy a decent home for under $300,000. Access to excellent hospitals and communities where people actually look out for each other. The insurance crisis made a lot of people question whether Florida was still worth it. Now, with these reforms taking hold, the answer is starting to shift. Florida isn't just surviving its insurance nightmare. It's rebuilding trust, one reinforced roof at a time. State 2, California. Now let's head west to California, where the insurance story is completely different but just as urgent. In Florida, it's hurricanes. In California, it's fire. And for years, the pattern was the same. Wildfires would tear through communities, and within months, insurance companies would pull out entirely. Thousands of homeowners, many of them retirees who'd lived in the same house for decades, suddenly found themselves uninsurable. Imagine that. You didn't file a claim. Your house didn't burn. But because your neighbor's neighborhood was too close to the wildfire zone, your policy got cancelled anyway. California finally said enough. The state rolled out something called the Sustainable Insurance Strategy, and it's forcing insurance companies to make a choice. If you want to sell policies in California, you have to cover the risky areas too. You don't get to cherry-pick only the safe neighborhoods and leave mountain communities stranded. That's a huge deal for older Californians who built their lives in places like Grass Valley or Nevada City. Towns where property values are still reasonable, where the air is clean, and where retirement actually feels peaceful. For years, these folks were being punished just for living somewhere beautiful. But here's where California got smart. The state isn't just forcing companies to stay. It's giving homeowners the tools to lower their own risk. If you clear brush around your property, if you upgrade to a fire-resistant roof, if you install ember-proof vents, California now requires your insurer to give you a discount. You do the work, they lower your rate. Finally, a system that rewards responsibility instead of punishing zip codes. And for homeowners who can't get private insurance at all, California expanded its FAIR plan. It used to be a bare-bones safety net that barely covered anything. Now it offers real protection, the kind that actually helps you rebuild if the worst happens. On top of that, California created a grant program that gives up to $40,000 to low-income families and seniors to harden their homes against fire. That's not a loan. That's free money to make your house safer and your insurance cheaper. Does California still have problems? Absolutely. The cost of living is high, especially near the coast. But in the inland areas, life is still manageable. Towns around Sacramento, San Luis Obispo, and Redding offer affordable housing, strong healthcare networks, and communities that haven't lost their small-town feel. What these insurance reforms do is remove one of the biggest fears hanging over retirement in California. The fear that you'll wake up one day without coverage, without options, without hope. California isn't just reacting to wildfires anymore. It's preparing for them. And that preparation is giving homeowners, especially older ones on fixed incomes, the chance to stay in the place they love without gambling their entire future on whether a fire breaks out 20 miles away. That's not just policy. That's dignity. State 3, Louisiana. Let's head down to Louisiana now, because if you think Florida and California have it rough, Louisiana's been fighting this battle for even longer. This is a state that knows storms. Hurricane Katrina, Hurricane Laura, Hurricane Ida. The list goes on, and every time the winds die down, the insurance crisis kicks back up. Companies leave. Rates spike. And homeowners are left picking up the pieces twice, once from the storm and once from the insurance fallout. But Louisiana is done being a doormat. The state just launched the Fortify Homes program, and it's one of the smartest moves any state has made in years. Here's how it works. Homeowners can apply for grants up to $10,000 to upgrade their roofs to what's called the Fortified Standard. That means roofs built to handle hurricane-force winds, heavy rain, and the kind of punishment that used to total houses. It's not just patching shingles. It's rebuilding your first line of defense. And once that roof is certified fortified, insurance companies have to offer discounts. We're talking 20 to 25% in some cases. For a homeowner paying $3,000 a year in premiums, that's $600 to $750 back every single year. Do the math over 10 years, and that one upgrade pays for itself twice over. But the real benefit isn't just financial. It's emotional. It's being able to sleep through storm season without lying awake wondering if this is the year your roof gives out. It's not having to evacuate every time a hurricane enters the Gulf because you know your house can take it. That peace of mind? You can't put a price on that. Louisiana is also working to bring insurers back into the state. For too long, the market here was so unstable that companies just walked away. Now, with legal reforms that reduce fraud and a state government that's actually invested in making homes safer, insurers are slowly returning. More competition means better rates and more options for homeowners who used to have none. And let's be clear. Louisiana has always been worth it for people who value community, culture, and a slower pace of life. The food is unmatched. The people are genuine. And outside of New Orleans, the cost of living is still well below the national average. Towns like Lafayette, Homer, and Shreveport offer affordable homes, solid healthcare, and neighborhoods where people still sit on their porches and talk to each other. You're not just buying a house in Louisiana. You're buying into a way of life that values connection over speed. These insurance reforms are what finally make that life sustainable again. Because for too long, the people who loved Louisiana the most were the ones getting hurt the worst by the insurance crisis. Seniors who'd spent their whole lives here were seriously considering leaving because they couldn't afford to stay covered. Now, the state is telling them, "We see you, we're not letting you go." Louisiana isn't just fortifying roofs. It's fortifying hope. And for retirees who want to age in place without fear, that makes all the difference. State 4, Texas. Texas likes to do things big, and its insurance problems have been no exception. Between hurricanes on the coast, hailstorms in the north, and wildfires out west, this state has been hit from every direction. And for years, homeowners paid the price while insurance companies played defense. But Texas is pushing back with reforms that actually make sense, and they're putting money where it matters most, in the hands of homeowners who take protection seriously. One of the smartest moves is the expansion of the Texas Windstorm Insurance Association, or TWIA. For decades, this was the insurer of last resort for coastal homes that couldn't get private coverage. It worked, barely, but it was expensive and limited. Now, Texas has strengthened TWIA and made it more accessible. Homeowners in hurricane zones along the Gulf Coast, places like Corpus Christi, Galveston, and Port Aransas, finally have reliable coverage that doesn't cost double what it should. And the state put caps on how much rates can jump year over year, which stops the kind of surprise increases that used to force retirees out of their homes. But Texas didn't stop at the coast. Inland, where hail is the bigger threat, the state is now incentivizing impact-resistant roofing. If you install a roof designed to withstand baseball-sized hail, your insurer has to give you a discount. Some companies are knocking 20 to 30% off premiums, and that adds up fast. For someone living in the Dallas-Fort Worth area or up near Amarillo, hail isn't a once-in-a-lifetime event. It happens almost every spring. A tough roof means you're not filing claims every few years, and fewer claims mean lower premiums long-term. Texas figured out that preventing damage is cheaper than paying for it, and homeowners are finally benefiting. The state also cracked down on contractors who inflate claims and drag out repairs. This was a huge problem after storms, where shady operators would promise the world, overcharge insurers, and leave homeowners stuck in the middle of legal battles. Now, Texas is licensing and regulating storm chasers more strictly, which protects both homeowners and the insurance market. What does all this mean for retirees? It means Texas is still one of the best places to stretch a retirement dollar. No state income tax. Affordable housing in cities like San Antonio, Austin suburbs, and smaller towns throughout the Hill Country. Access to world-class medical centers in Houston and Dallas. And a culture that values independence and self-reliance. Yes, the summers are hot. Yes, the property taxes can be high. But for retirees who want space, freedom, and a government that's actually working to fix the insurance mess, Texas is stepping up. These reforms won't solve everything overnight. But they're a signal that Texas understands the problem and isn't just going to let insurance companies run wild. For homeowners who've been hanging on by a thread, that signal matters. It says you're not fighting this alone. And in a state as big and stubborn as Texas, that kind of reassurance goes a long way. State 5, North Carolina. North Carolina doesn't make headlines like Florida or California, but it's been quietly dealing with its own insurance crisis. Hurricanes batter the coast. Flooding hits the Piedmont. And in the mountains, wildfire risk is creeping higher every year. For homeowners, especially retirees in popular areas like Asheville, Wilmington, and the Outer Banks, insurance costs have climbed fast. Too fast for people on fixed incomes to keep up. But North Carolina is taking action with a two-part strategy that's simple and effective. First, the state is expanding its Beach Plan and Fair Plan to cover more homes in high-risk areas. These plans used to be narrow and expensive, available only as a true last resort. Now, they're broader, more affordable, and designed to keep people insured instead of forcing them out. Second, North Carolina is rolling out mitigation incentives. If you elevate your home in a flood zone, if you install storm shutters, if you upgrade your roof, your insurer has to acknowledge it. And acknowledgement in this case means lower premiums. The state is also working with local governments to improve building codes, especially in coastal counties. Newer homes are being built stronger from the start, which reduces claims and stabilizes the market for everyone. It's a long-term fix, but it's the kind of thinking that prevents future crises instead of just reacting to them. For retirees, North Carolina still offers what it's always offered. 4 real seasons without brutal winters. A lower cost of living than most of the East Coast. Mountain towns with clean air and tight-knit communities. Beach towns where life slows down and neighbors become friends. These insurance changes aren't flashy. They're not making national news. But they're giving people the chance to stay in the state they love without choosing between coverage and bankruptcy. And sometimes, that's the most important kind of reform. The kind that works quietly but saves lives. State 6, Colorado. Colorado's problem is straightforward. Wildfires are getting worse, and insurance companies are getting scared. The result has been a wave of cancellations in mountain communities, leaving homeowners with few options and even fewer answers. But Colorado is fighting back with the Wildfire Mitigation Fund, a statewide initiative that's putting serious money into prevention. The state is helping communities clear brush, create defensible space, and build fire breaks. And when entire neighborhoods become safer, insurers have to lower rates for everyone in that area. It's a collective approach that works because wildfire isn't just one house's problem. It's everyone's. And when everyone pitches in, everyone benefits. Colorado is also offering grants and low-interest loans to homeowners who want to harden their properties. Replace that old wooden deck with something fire-resistant. Install ember-proof vents. Create a buffer zone around your home. The state helps pay for it, and your insurance bill drops as a result. For retirees who move to Colorado for the mountains, the fresh air, and the outdoor lifestyle, these reforms mean they don't have to choose between beauty and security. Towns like Durango, Grand Junction, and Fort Collins are still affordable compared to Denver. Healthcare is strong. And the sense of community in smaller mountain towns is exactly what a lot of retirees are looking for. Colorado isn't just managing wildfire risk. It's making it possible to live near nature without constantly fearing it. And that balance is what keeps people here, even when the insurance market gets tough. State 7, Arizona. Finally, let's talk about Arizona, a state that's been flying under the radar but is making moves that matter. Arizona's insurance challenges come from extreme heat, monsoon flooding, and increasing wildfire risk in the northern forests. For years, insurers treated Arizona like a gamble, raising rates without much explanation and leaving homeowners frustrated. Now, Arizona is requiring more transparency. Insurance companies have to justify rate increases with data, and the state insurance commissioner is pushing back on unjustified hikes. It's not dramatic, but it's effective. Homeowners are seeing more stability, and fewer sudden shocks when renewal time comes around. Arizona is also promoting xeriscaping and fire-safe landscaping in wildfire-prone areas. Homeowners who replace grass with native plants and create fire breaks around their property can qualify for insurance discounts. It's a simple trade. You make your home safer, and your rates go down. For retirees, Arizona remains a powerhouse. Low cost of living in cities like Tucson and Prescott. No snow to shovel. Excellent healthcare networks, especially around Phoenix. And a state government that's finally taking insurance reform seriously. The heat is real. Summers are brutal. But for 8 months of the year, Arizona offers the kind of weather and lifestyle that makes retirement feel easy. And now, with insurance reforms stabilizing costs, it's becoming easier to justify staying long-term. So there you have it. 7 states that aren't just talking about fixing the insurance crisis. They're actually doing it. From Florida's hurricane grants to California's wildfire protections. From Louisiana's fortified roofs to Texas's coastal coverage. From North Carolina's flood plans to Colorado's fire prevention. And from Arizona's transparency rules that finally hold companies accountable. These states are proving that when government decides to stand with homeowners instead of corporations, real change happens. And it's change that shows up where it matters most, in lower premiums, stronger homes, and peace of mind that's been missing for far too long. If you live in one of these states, now's the time to look into what's available. Apply for those grants. Make those upgrades. Take advantage of programs designed to help you stay safe and stay covered. And if your state isn't on this list, don't lose hope. Because reform is spreading. Other states are watching, learning, and starting to ask why they're not doing the same thing. The insurance crisis isn't over. But for the first time in years, homeowners aren't just victims. They're getting help. And that help is coming from leaders who finally understand that home isn't just an address. It's everything. If this video opened your eyes to changes you didn't know were happening, hit the like button. Share it with someone who's been struggling with rising insurance costs. And subscribe to our channel, because we're here to bring you the information that actually protects your retirement, your home, and your future. Thanks for watching. Stay informed, stay covered, and know that you're not in this fight alone.